Happiness is the progressive realization of a worthy ideal. This is why we've dropped, because a lot of people are not feeling they're making progress because inflation, that robs people of that feeling of progress.
And, that speaks to number one, the affordability issue, the lack of confidence, consumer confidence issue, the difficulty in getting financing because the banks have tightened up. JG, you and I have said this many times. It's a common phrase, follow the money. And where is the money of the wealthiest people moving? So house prices have gone up, but it takes less gold. That's because our dollar is being devalued. I cannot stress that enough. And when you look at gold as a canary in the coal mine, it's where money seeks safety. So central banks around the world are buying gold in tonnage, record amounts, and have been really since 2019, but have cranked it up to astronomical levels literally in the past year.
Ladies and gentlemen, welcome to episode number 58, Patrick. And if you look where we started, episode number 1, and where the real estate market was, to episode number 58, let me tell you, it is different. And I think we should start the show by talking about this unhappiness that is kind of throughout the market. And in fact, CD Howe Institute just published a study that has dropped Canada from the 5th happiest to the 15th happiest. That's quite a bit of a drop, isn't it, Patrick?
It is. What's interesting about this particular slide is Stephanie and I just dropped a podcast on our Mindset Matters podcast, which speaks to what people are facing, and that if they're not seeing a future, if they're not able to say, okay, well, today I'm here and in the future I see myself there, happiness levels drop dramatically. And when we look at this particular cohort, when you look at that age group of unhappiness, guess what? It correlates with the fact that affordability on housing, people being able to have that home, that white picket fence, that 3 bedrooms or whatever it might be of their dream, and the lack of affordability, you see that younger cohort really struggling, and they're just not happy. And so they've got nothing to look forward to in the housing market. And we can actually see on the next chart that we'll show, which is, the prices as they've increased, we've seen happiness levels drop.
Now, interesting, Patrick. So here's how I define happiness. I'll just give you my own personal kind of definition. And this is a mentor, 25 years ago, gave me this definition. I've used it ever since. So for me, happiness is the progressive realization of a worthy ideal. That's what yields to happiness, is like a progressive realization of a worthy ideal. So something that you believe is a worthy ideal and you're progressing. So progress equals happiness. And I think, Patrick, this is why we've dropped, because a lot of people are not feeling they're making progress because inflation, as one of the major issues that we've just gone through, and we're not done with it yet, that robs people of that feeling of progress. They go to the store, and you got this great chart, which I want to show in a second, but you go to the store and like the money you put on the counter just buys a whole lot less than it did. And that is essentially the opposite of progress. And you're right, that all kind of shows up in unhappiness, if you will. I mean, I'm happy. I'm happier than ever, Patrick, but I'm not the average,
Well, no, you're not the average, as a matter of fact. And, you make a really great point, JG, which is it's the progress. It's knowing that you're gaining ground. And people are unhappy right now, especially the younger cohort, because they don't feel like they're gaining ground. So you didn't say we achieve a worthy goal and we're happy. No, it is the progressive steps that we take towards that goal and the future that we see that we can achieve it. And right now, people aren't seeing that as being achievable. So they feel like they're not making any progress. And as a matter of fact, they take 2 steps forward or a step forward and take 2 steps back. That's what's going on in the world today. Because you actually look at that happiness chart and, look at the 60-year-old and above, it's actually the happiness levels are ticking up. And why is that? Well, I happen to be the senior citizen in the room right now. And I know, and I mean, let's face it, I've gotten wealthier because I own assets. I own real estate. So I don't have that same pressure as the younger cohort that is really struggling to make those gains. So the average 60 plus, year old has gained because they own these assets. They are ahead of the game in that regard. And we can see that, well, guess what? It makes you a little happier because you're progressively moving forward.
Yeah, I think that's really well said, Patrick. And this chart, even though we believe in, and you brought this up, and I think it's very fascinating, is correlation is not necessarily causation, right? And so we're not necessarily saying that this chart is the cause of the unhappiness, but it's definitely correlated, which is interesting. But look at the precipitous drop, Patrick, in first-time home buyers. I mean, this has fallen off a cliff. Now, this chart is as of October 2021, and I can't wait for them to publish again in 2025, hopefully, because I'm very curious to see where we think this is going to go. Because, I mean, Patrick, we believe that first time homebuyers are even lower than they were. And look at that. I mean, it's literally falling off a cliff here.
Yeah, it's not rocket science. We know it's gotten significantly worse. How much worse can it get? I mean, it's dropped, dramatically. And, that speaks to number one, the affordability issue, the lack of confidence, consumer confidence issue, the difficulty in getting financing because the banks have tightened up. There's no good news for first time homebuyers.
Yeah. Now, I want to before we move on to the next topic, Patrick. I thought this image was super fascinating when I seen this because it really shows kind of the difference between 1947 and today. And of course, we've all heard the stories from our grandparents where for $1 we used to buy a case of beer and a loaf of bread and a bologna and a this and a that and all these various things. This is fascinating, Patrick. This is $12.50 and what it bought a family of groceries, which in this case seemed to last a family of four, including a cat. Let's call it a family of five if you include the cat. This would last them a week, and that $12.50 then is worth $166 today. Can you still buy this amount of food for $166, Patrick? What do you think?
Well, something is interesting that you asked that question because let's move on to the gold conversation. So I want to just share, when I was a young man and my parents, four kids, we'd go to the grocery store and it would take four kids multiple trips from the car to the house with bags, those paper bags full of groceries. And I don't know, and I don't recall what the amount my parents spent, but if you listen to them, it wasn't a lot of money, relatively speaking, but we made multiple trips from the car to the house to unload these groceries, feeding a family of six plus a couple of dogs, right? We joke about that. But, when we look at what we refer to today as the canary in the gold mine, which is gold and the price of gold. So I want to share a quick story before we get into it. And this is about gold, by the way. So let's just give a scenario where we own hard assets and we think that we're gaining net worth by doing that. But there's another side to that story, which people have a difficult time wrapping their mind around, which is it's actually the devaluation of our dollar. So gold is the only real money. Now, back to your question, can we buy $166 worth of groceries and have that much? Like, what is it? I can't remember the exact question, but the point is if you had gold in your pocket, you'd actually be doing that if you had bought gold and held on to it. So let me share this story with you. So let's just take the scenario. Your grandparents or perhaps your great grandparents, back in 1925, 1930, they immigrated into Canada and they get married and they start to work and planning for a family and they start to have a family. Gold back at that time was $30 an ounce. And your grandfather worked really hard and he's able to save up $30. Now, $30 was a lot of money. He was probably making 25 cents, 50 cents an hour, somewhere in that neighborhood. But he saved up and he bought that ounce of gold. And he said to your grandmother, he said, I'm going to put this in our chest and this is going to be part of our legacy. We're going to give this to our grandchildren or our great grandchildren. She goes, that's a great idea. And so they did that. And then he continued to work really hard and he actually bought a house and paid for it. And he paid the astronomical amount of money, $7,500 for that house in the Toronto area. And he paid for it and he took the title of that house and he said, something, sweetheart, I'm going to put this and we're going to give this to the kids. And it's going to go to our grandkids and our great grandkids. And she goes, that's a great idea. And he continued to work hard. And actually, he saved $20 and he put an extra $20. He says, something? I'm going to put this cash in that little box with our gold and our title. This is for our grandchildren. And so now come ahead and you're that grandchild or that great grandchild and you open up this little box and inside that box is an ounce of gold. Well, back when your grandfather bought that $30 ounce of gold, It was known, and the reputation for an ounce of gold is it will buy you a fine suit, a wonderful meal, and a fantastic hotel room. Now, forge ahead this many years later, you open up that box, there's that ounce of gold. JG, today, an ounce of gold is about $4,100 Canadian. It will buy you a great suit, a wonderful meal, and certainly a room in a hotel. Now, the title of that house, you look at it, $7,500 in Toronto. That house today is worth $720,000 average price. And you go, wow. And then you grab that $20 bill and you say, well, if we top it off, we can buy a couple of coffees at Starbucks. The point of this story is that our fiat currency, our cash, continues to lose value. Hard assets such as gold, real money, such as real estate, actually, we think it's appreciating. It's really the devaluation of our dollar, which is only to say that we need to get our capital into hard assets. So I share this story often to give people a context for it. And here's what we need to know. JG, you and I have said this many times. It's a common phrase, follow the money. And where is the money of the wealthiest people moving?
No, I think you're absolutely bang on, Patrick, in terms of this you know looking at it from a gold perspective changes everything, doesn't it? I mean, it's a different lens to look through, and it changes everything. And I actually did some rough math while you were illustrating that story, and 34. So you're right. Back in 1947, what I'll give U.S. prices just to eliminate the conversion of Canadian, but a 1 ounce in 1947, 1 ounce of gold was $34. That $34 today in dollars is worth $485. That's what $34 then is worth today. But 1 ounce of gold today is $2,900 US, 4,100 Canadian, and that's the difference. That's a 7 times difference, Patrick. That's 700% different. That's a massive deal, isn't it?
Well, it is. And so when you look at house prices today, and you've got the chart there that we did in terms of what it would, if you look at buying a house in gold, I don't know what year we had, but where is that? So that's back in 2000. So average price of a house was 165,000, took you 300 and what is that, 97 ounces of gold to buy a $165,000 house. Today, average price is $720,000 roughly, and it takes you 173 ounces of gold to buy that house. So house prices have gone up, but it takes less gold. That's because our dollar is being devalued. I cannot stress that enough. And when you look at gold as a canary in the coal mine, it's where money seeks safety. So central banks around the world are buying gold in tonnage, record amounts, and have been really since 2019, but have cranked it up to astronomical levels literally in the past year. So central banks are nervous. The wealthiest individuals in our country, in the world, are going to gold. Now, they're also going to real estate, by the way. I can't stress enough, as much as we think our assets are elevating and how do we get into the real estate market? It's too expensive when we can't do cash flow. I get all of that, by the way, but it's up to us to get our capital to work. Real estate's fantastic for that because we can leverage our capital. It's much harder, and so people are kicking off to the sidelines, but they are going to pay a price of that for that over the years as our dollars continue to devalue, JG. And if you've got money in the bank today, just know that its buying power in a year from now will be as much as 15% less than it is today. And so I can't stress enough, we need to get our capital to work. And of course, real estate is one of those things.
Now, Patrick, let's. I just love this lens because when you put on a different set of glasses like this, you see things differently, and when you see things differently, you get to ask new questions. And I think this is a very fascinating way to look at it. And you're absolutely right. And I think this is what you've been talking about for some time. A lot of real estate experts that are not necessarily just trying to sell real estate, and that's the biggest thing, Patrick, with the Real Estate Investment Network and the things we've done. Like, we're not interested in selling real estate. We're not trying to sell real estate here. We're just trying to educate based on like the realities of the real estate market. And this is a different lens for people to see the real estate market through. Now, speaking of the housing market, Patrick, quite a bit of things are bad. I mean, listen, is there any good news? Let's
No,
just be
no,
honest, Patrick.
there's
Is there
no,
any good news?
no, there's absolutely no good news. There's none. It's like I've been looking for some, but I can't find any. So if you like these episodes and you want to learn more about what's going on with real estate in Canada, investing in real estate, and understanding how to invest in real estate the right way, head on down to the descriptions below, follow those links.